Alright, hello, I am Matt. This is my fourth stock speedrun for the weekend of January 15th, 2022. If you are unfamiliar with what a stock speedrun is, you can check this video's description as always for an explanation and also a disclaimer as to its content. Let's go. Hey, Sherwin Williams with the paints and the colors and the... Okay, that's enough fooling around. So I know they do paint. I feel like everyone knows they do paint. Do they do anything but paint? Develops, manufactures, distributes, and sells paints. Alright, this is pretty simple. Oh, they also have coatings, related products, America's Group Consumer Brand, performance coatings. Alright, yeah, so, yeah, it's paint. Lots and lots of paint. Pretty big company to sell just paint, $80 billion valuation. Yeah, why is this... Oh, there it goes. Haha! Holy stocks go up, Batman. This thing never fails to disappoint, apparently. 5-year looking very impressive. Max chart looking very impressive. Holy moly. 1-year chart doesn't look too bad. Had a bit of a slump recently. Had a bit of a slump ever since December. I kind of want to know why that is. Sherwin-Williams falls on guidance. Really? Lowers guidance, citing supply chain and labor issues. Okay, that makes sense. However, I'm not going to let this impact my decision too much because supply chain and labor issues are temporary problems. They're temporary problems that are outside the company's control, so it does not reflect in any way on the performance of the company or the, no, what's the word I'm looking for? The ethos of the company, you know, their, how good their Sigma grind set is, you know? So I'm not going to let that impact me. In fact, if I don't see anything I don't like, I'm inclined to say this is a buy in the dip just because of these things that are impacting it now are temporary and will be reversed in the future. And if the stock is as good as it once was coming out of that, then I think it can continue to roar from there. So let's take a look. Sherwin-Williams slides. After paint maker lowers its guidance to reflect supply chain and labor issues, as what was said. So, it falls. Everyone's saying it falls. Oh my goodness. Whew. IMS Capital Management buys these things, but then sells other things. One of the things it sells is probably... what's this ticker? It's throwing tickers at me. SHW. Hey, new purchases! So this isn't one of the ones it doesn't like, this is one of the ones that it does like. That makes sense. That makes sense. Like I said, buying the dip, these guys know what they're doing. That was back on January 5th, though. So they may have gotten in a little early, but that's not that big of a deal. In fact, let me look at the 1 month. So they bought, boop, probably like right around here. Probably wouldn't have hurt them to wait a little bit, but I think they're probably still pretty good. This is fourth quarter. Franklin Managed Trust buys Sherwin-Williams. All of these funds are buying Sherwin-Williams. I like it. I like it. You usually can't rely too much on what a single one does, because you don't know what kind of agenda they might have. But if several of them start doing the same thing, then you can start thinking about looking at something, you know? Let's see. Could be struggling to allocate capital. Let's see what Simpleton Wall Street has to say. To sell if you believe Morgan Stanley's 20% pullback forecast. Wait, 20% pullback based on what? Supply chain? This guy needs to lay off the biscuits. Look at him cheeks. Witnessed failing interest from hedge fund managers. Logic holds that there was a sect of money managers that slashed their entire stakes leading into quarter 4. If you're looking in the short term, I guess that makes sense. But after the fact, I wouldn't be surprised to see a lot of them buy in. In fact, that's what you were seeing just there. Struggling to allocate capital. I want to see what this has to say. Fantastic return, and not only that, it outpaces the average 11%. Okay, that's good. Those are apparently good numbers. Seven growth oriented that could suffer in the case of a steep market correction. Up here's our Sherwin Williams. I want to see what it says about Sherwin specifically. DIY products become more popular last year. People turn. That's true. That's true. Two things are working against the stock. Stock is now trading at dizzying price multiples. 49. Wait a minute. 49.7. Holy shit. Hold on a second. I gotta look at that. Holy hell! That. Wow. Okay. That is a very high PE. I'm starting to get a little more nervous here. And supply chain disruptions. Yes, we know. Probably have gotten worse, resulting in low outlook for full-year earnings. We know. Oh, but they're purchasing specialty polymers. And it's been their longtime supplier. Ooh, they're consolidating their supply chain. Okay, that's, what do you call that? Is that vertical integration? Where you basically just absorb your own supply chain into yourself so you can control it. That kind of makes sense. Probably a good time to do that too, when the suppliers are probably getting hit and a bit devalued by the supply chain issues themselves. Also, that's kind of cool. You know, I think this is a smart move actually. This is pretty. I like that. I like that sign. Okay, yeah, this is the one I was looking at before. What else do I want to look at here? I want to look at... No, hold on a sec. The only thing that worries me right now is that PE. I wish my attention hadn't been brought to that. Because it holds current levels, dropping back to 285, and thus an even greater buying opportunity. You don't have to convince me of the long-term history of Sherwin Williams being a great return investment. However, for people such as myself that missed the boat when it was in the 30s, 70s back in 2011, but waiting for a correction opportunity like this to jump on board for the long haul. I kind of agree with David here. This is an opportunity to jump in. Usually because investors found something else to put their money into. Well, no, it's supply chain. Everyone seems to think it's supply chain. Yeah, 45. Yeah, the only thing that's worrying me right now is that PE. Estimated to go down over time. Is that because the earnings are gonna increase, or is that because the price is gonna decrease? Actually, I think forward PE always assumes that it's the earnings that are going to increase. Otherwise, the metric isn't really all that useful. All right, while that loads, let's see what else we can find here. That loaded? Yes. Forecast for price to earnings growth rates. I don't know how to read these numbers. You know what is, how is the supply chain holding up? What are the major supply chain issues? And, you know, hasn't that been cleared up because you haven't heard stories about Well, here's this article from 4 days ago about grocery store shelves, but you know, I haven't heard a lot of news recently about all of those shipping ships that were offshore, waiting to get unloaded. We'll continue well into 2022 with a twist. Ooh, what a twist! Come on, load! I got 5 seconds. Oh my God, why is your website garbage? All right. So I like it. I like it a lot. The only thing worrying me is that PE. But I'm willing to toss that aside and say it's a buy. But something I will say is that dip it is in right now, I don't know if it's done. I don't know if it is done dipping. I would be surprised if it is not. So even though I want to give it a buy and label this specifically as a buy on the dip, I want to say word of caution, but that makes it sound like this is solid advice that you should take to heart, which you shouldn't. I specifically say that in the disclaimer that I'm just some guy on the internet talking. But sure, I will use the word that I just used, that I already forgot. It's a buy in the dip, sure, with a warning that I could see it continue to dip for a bit. The size of the dip, both in amount of time and amount of dollars, could be quite variable. But I could see it to continue to dip because supply chain seems to still be a pretty ongoing issue. And if that is what is affecting their business, and if that is what is making their stock price take a hit, that's going to continue for a little bit. It could stop dipping here. It could stop dipping here and stay stagnant. It could keep dipping a little bit more. It could even rebound from here, even though I think that out of the 3 scenarios I just outlaid is the least likely. But it will come back eventually because it is obviously a good company, and once it is not being affected by things that are out of its control and that do not speak to how well of a company it is, once those issues are resolved, I think it continue to do well. So that's my justification for a buy. If you would like, please let me know what you think. Do you like this company? Do you not like this company? Do you agree with me? Do you disagree with me? Feel free to call me a dumbass. I don't care. Just let me know, and I will catch y'all in the next one.